opportunity to, it always announces itself, but yeah, session is gonna be recorded just so we can send it back to you after the session. So if you want to replay everything or listen to some bits of our conversation today, the team will send that after a meeting today. Like I said, my name is Edima. I am part of the African Professionals Network of Ireland. So for those who do not know what APNI is, I would give you a quick intro as to what we do at APNI and how you can get involved and all the upcoming events and initiatives that we have. So our session pretty much today is Let's Talk Mortgages from the theme. So thanks so much for signing up. Graham is going to go through our session today to give us input on fundamentals when it comes to mortgages, and then we're going to have this an opportunity to ask him questions at the end, and then we'll probably recap as to how you can get involved. But before that, you can ask questions. So meet the APNI. So the APNI was founded in 2016 was founded in 2016 by a couple of volunteers, and is still run by volunteers. So our goal here at APNI is to foster collaborations between members of African descent living and working living and growing here in Ireland. We do this by running several events, webinars, workshop, career accelerators, mentorship program, support for entrepreneurs to help them accelerate their growth while living here in Ireland. So our mission, like I said, is to provide resources for our members to maximize potential and to be individuals of values in their places of work and community while being trusted partner to leading organizations to support their DI initiatives. So we have about 3,400 members within the APNI community, and like I said, this organization is run by by volunteers. We have about 20 people on the team. You did see Ian and Balently earlier on say hello to us. So we have a lot of effort goes in behind the scene by the team to deliver on programs that provide value for our members. So pretty much our goal is to amplify diverse talents, experiences, and cultures within Ireland and heritage, championing African excellence. Our other goal is also to be seen as a strategic partner as well by leading organizations, creating opportunities for open and meaningful dialogue conversations. That's our mission at APNI. And upcoming events. So we do have 2 events coming up that you should lock in your diary. We have the summer networking mixer. So this is an opportunity for members of our community to come together in person in Dublin to meet, network, grow, expand the network. It's going to be a fun time. So I'll encourage you to register. So if you go to IE/upcoming events, you would see information on how you can register. So down to today's conversation. So I don't want to keep you waiting for a bit because I know you're here to listen to Graham. So Graham is a business development manager at EBS, and his role pretty much is around supporting early stage first home buyers, swappers, just really supporting people or folks around mortgages and how they can avail of mortgages opportunity to get into their dream homes. I always believe the story is much more told by the owner of the story. So I'm going to hand over to Graham to start off our session for the evening.
Yeah, brilliant. Thank you very much, Edima, for that. Again, can everybody hear me okay? Hopefully you can. I'm going to share my screen now if I can. So I'll just replace your sharing, Edima, if that's all right.
Yes, I am stop sharing there.
Yeah. That's nice. Oh, now can everybody see that? Okay. Oh, skipped one already. Okay. But yeah, the email gave me. Okay, I'll just hang on a sec. I was actually just about to apologize in case my 2-year-old burst in there anyway. From home, so. But yeah, Adema, thank you very much for inviting me along to speak with everyone this evening. I'm delighted to be here. As Adema mentioned, my name is Graham Coffey. I'm a business development manager. I work with EBS. Yes, it is my job to go out and drive mortgage business for the company, but I have a genuine, I'd say, love for this role. I've worked in the industry, mortgages primarily, for over 10 years before I took a stint in tech world where I met Adema, and now jump back into mortgages. And yeah, I just love helping people throughout the process, kind of getting rid of any stigma around the process, just to try and simplify it, make it as easy as possible for people. Just be transparent and honest with people throughout the whole time, and just communicating with them to help them where I can. So yeah, this is kind of Make Mortgage Masterclass. Mortgages, it's a broad spectrum, so I won't cover everything today. I'll do my best to cover as much as I can, and then like that, there will be a Q&A. You'll get my details after this, so I'm happy to help and arrange a time to speak to everybody. So I'm just going to jump into the agenda. Okay, so the first main process for everybody is to get the approval in principle.
What's the question you asked me?
No, don't worry. I want to say, I want to.
Okay, can
Sorry
you
guys,
all
if you're not speaking,
mute?
can you mute?
So say if I want to do the, if I get to Nigeria, that's when I top up the 5 euro, 10 euro, abi?
Okay,
But I have.
He says,
I'll just keep going.
He says the money that you put into it is 20 euro.
Yeah.
You will be on Vodafone red roaming.
Yeah.
So
Okay, so
you will have
the approval in principle is what everyone should set out to get in the first place. We'll talk about what that is, where to ultimately start the whole mortgage process, interest rates, the difference between fixed and variable, some myths and challenges that we see customers come up against, I hear about, who I can help, and then we'll do the Q&A. I do have extras there about why EBS, the government schemes, and why people should switch their mortgage. But for the interest of this evening, we're just going to go through the process, and like that, hopefully, if anybody does have any questions we don't get to, they can reach out to me. Okay, so the approval in principle, what is this? So this is essentially what you get initially when you come in and apply for a mortgage. It's just a letter advising you how much you're approved for, the certain amount that you're approved for, so you know how much you can bid on a property. It's mainly for house hunters, so people who haven't got a property in mind yet. I would always advise people to seek the maximum available here. There's no obligation to use it. It's just a piece of paper. You can tear it up. There's no obligation to use the amount you're approved for. If you find a house that's you don't have to spend as much on, obviously do what's best for you and borrow less, so you don't have to pay as much on the long run. The approval in principle is valid for 6 to 12 months, depending on the lender that you go to. With us, it's currently 6 months. Everybody used to be 12 months, but then when COVID happened, certain industries were a little bit more volatile, so they moved it to 6 months. But we're looking to get everything back out to 12 months. When it does expire and you're still looking for a house, we will look for up-to-date documentation just to reignite and get you a new approval in principle to extend for another 6 to 12 months. If you do find your home and go state agreed with the approval in principle, we'll then move forward to look to get your official letter of offer or your contracts. We'll touch on that again later. And then if you've already gone sale agreed, there's no need to go for approval in principle. We can go straight to full loan offer. Again, I wouldn't recommend this be the route everybody take. As soon as you think about a mortgage, go in and get the approval in principle. This can't be helped in certain scenarios, because if someone's approved with one financial institution, and then what's happened recently is EBS dropped our green mortgage rate, so people wanted to move to our rate, and then they were already sale agreed, and we need to get the contracts drawn up. We'll obviously do everything we can to get that, make that happen. But I have other customers come in to me who haven't spoken to any financial institution and just have put a bid on a property because they have X amount saved and they think they can afford it, and they have to sign contracts in 3 weeks, and you could hit any sort of road bumps there, lose out on the house, and it's just a more strenuous situation. So I wouldn't advise doing that. It can be done, but I wouldn't advise it anyway. So where to start? As soon as you're even thinking about getting a mortgage, or seriously thinking about getting a mortgage, go in and speak to a mortgage advisor. You can do it in person, over the phone, or virtually, whatever you prefer. Every single case is different. Okay, so there's no point. Well, you can, if you want, listen to your friends down the pub about what happened to them and try, like, whispers there, or what your mom's friend's niece got with her mortgage. Like, there's all sorts of stories you can hear, but it's completely case by case. So please go in and speak to a mortgage advisor first. Like, it's very simple. What you need for the initial discussion is just to have a rough idea of your income, loans, and savings. And then nothing daunting about what you're going to discuss in the meeting. It's just if it's a single or joint application, if it's a first-time buyer, second-time buyer, or mover mortgage, whatever it may be. How many, if you have children, how many, any childcare, how much, loans, how much of the monthly repayments for these loans. Our main assessment, as you probably imagine, is on the income. So just have an idea of what your gross basic salary is, any commissions or bonuses attached, and any mandatory pension contribution you make. And that's really all we're going to go through. That all you need to be able to provide us. Okay. Now, it's not just as simple as that. There are other factors that we do have to take into account. So, first-time buyer lending rules. So if you are a first-time buyer, what do you need to know about how much you can borrow? So it's 90% loan to value. So this means you can borrow 90% the value of the property, and you have to pay a 10% deposit at a minimum. Okay. So if you're looking at a house worth 300,000, the max you can borrow is 90% or 270,000 of a loan. You need then the 10% or 30,000 is the minimum deposit you required for the house. But this is why, again, you should go in and talk to somebody. A lot of people, well, 1 or 2 people have come in to me and said, I have 30,000, I want to buy this house for 300,000. And well done for having the 30,000. But you also need stamp duty, which is 1% the purchase price, which in this scenario is 3,000, and legal fees of 2,000. So in total, you need to be coming in to buy a house for 300,000 with 35,000 there. Okay, that's just in this scenario. So you need your 10% deposit, 1% the purchase price, stamp to cover stamp duty, and 2,000 most financial institutions will look for just to cover legal costs. All right. And then the loan to income. So this is basically how much can you borrow based on your salary. So you can borrow 4 times your calculated household income. So whether it's a single application or a joint application, you can borrow 4 times the calculated household income. You can go outside this and seek an exception or exemption. They're one and the same thing. So you can get up to 4.5 times your income if it's needed for the property that you love, that you want, you need. And we can go up as high as 4.5 times. There are some mitigating factors we'll discuss in a couple of slides, but when someone comes into me looking for an exception, I always advise them as a qualified financial advisor, and I hope everybody would, not just get a big mortgage in for their own pipeline, but you have to think long term. It's all well and good to max out your affordability now, but if you're a couple that are planning a wedding in a year, or the family's going to grow, or you need a car, then obviously that's going to be an extra expense. So don't max yourself out. Now, if you believe that, on the other hand, your salary is going to increase to cover this increased expenditure, then look, make the right decision for yourselves. But always think long term when it comes to it. When you're looking at for an exception, yes, they are more readily available from the Central Bank of Ireland. They're renewed at the start of every year. So if you think you need one, or you know you need one, apply for one at the start of the year. They do come back into circulation though. So if I approve a mortgage for somebody in February and I ring them in March and how are you getting on? But they tell me they've gone to another provider, we will then take back the exception that we gave them, and it will go back into circulation. So it's always a possibility to get them as you grow throughout the year. Okay. Then if you're a second time buyer, what are the lending rules? The same, 90% loan to value, but you can only borrow up to 3.5 times your salary. Okay. So there are exceptions here again. You can go to 4.5 times with an exception, but again, think long term. That used to be for second time buyers, you needed a 20% deposit and you could borrow the 4 times, but they changed it down to a 10% deposit just to help people. It worked out better for the historic second time buyer cases to offer this new 10% and lower the loan to income. Okay, now as I mentioned, it's not just that simple. There are other things that we need to make sure you can afford as you move forward throughout the mortgage process. So demonstrated repayment ability is one of the big ones. So what is this? So let's say your monthly mortgage repayment comes to $1,000 per month. Okay, we need to see that you've been paying that, or you've demonstrated that you can pay that for the last 6 months. So typically we see this if someone's renting. Say your rent is $1,000 a month and your new mortgage repayment is $1,000 a month. Obviously, you're not going to be renting anymore when you get into your new home. So that 1,000 moves to your demonstrated repayment ability. Now, I wish it was that simple for everybody where the rent just covered the new mortgage. It's not. Sometimes the rent is higher than the mortgage. Other times the rent is lower and we'll need to make up the difference through savings, or people who are living at home with their parents and they're only saving. We use their savings to cover the new repayment amount. We need to see it for the last 6 months. And this is why we need all your accounts, just so we can see that you have demonstrated this. The rent to be electronically transferred out every month to your landlord, and savings to be going into your savings account and remaining there. A lot of people tell me that they're saving $1,000 a month, and then I see the statements, and before payday the following month, they're taking out 200. So typically they're only saving 800 a month. So we look at taking an average of the last 6 months. Now you don't have to put it into a savings account. You can leave it build up in your current account and we'll take an average of the growth in the last 6 months. But it's easier for yourself to manage that we can see it going into account and staying there for 6 months. Now, I'll be honest, I was a bit of a devil when I was trying to save, and whenever there was a wedding or a concert to go on, I'd take money out. So for me, I had to set up a 30-day notice account where the money went into a notice account. I couldn't access it for 30 days and I could just leave it there. And to be honest, by the time the 30 days rolled around, I didn't need to take the money out, but it was a way for me to manage my money better. So that's what some people have to, well, I had to do anyway, just to stop myself being too social. But look, everybody can do whatever works best for you. We can also look at taking shares into account. If you buy shares to your company by choice, or you pay an extra voluntary contribution to your pension, you won't have to stop it unless we need you to, but we can use it to strengthen how much repayment capacity that you do have. Okay. The next point there, that we do stress test this. Okay, so obviously we've had recessions and the ECB with inflation have raised rates, so we need to stress test this so that we know you can afford it. So for example, the 300,000 over 30 years at a rate of 3.75 will give you a monthly repayment of 1,389. We would stress test this to the rate of 6.5, so your payment would be 1,896. So if you came into me and you wanted 300,000 over 30 years, you need to show me a repayment capacity of 1,896. Okay, that's why, again, every case is different. Everybody's repayment capacity figure is likely to be different. Again, yeah, I understand that it is tough with the cost of living and everybody paying higher rents to save and cover this, but try not to see it as that. See it as an extra savings that you can have towards something you need for the house. The reason we do this is because we cannot and will not put you in a compromised position. Because if we only say you can pay the 3.75 and then there is a recession or anything like that, like happened in 2008, then people are giving out to the banks because they shouldn't have lent it. It wasn't really affordable. So we have to stress test this to make sure that we're not compromising you in a few years' time. If, well, God forbid it did happen. Okay. So that is demonstrated repayment ability. Another main factor that we look at is net disposable income. So what is net disposable income? What we look at here is the net monthly household income that comes into the house. So say you're a couple and we look at the both net incomes that come in. We take away the Central Bank of Ireland cost of living guidelines allowable for the demographics of the house, which in this case is just a couple. And then we take away any short-term debt or creche fees if there are applicable. And what's left over is the net disposable income that you have left to service your mortgage repayments. Okay, so this is again why it's case by case. If you and your partner earn X amount and you know your friends earn the exact same amount and they go into their mortgage advisor and they get approved 4 times their income or even 4.5 times their income, and you go in and expect the same thing, they might be just a couple living together, whereas you and your partner might have 2 kids and creche fees and a car loan. So the net disposable income will be different. So they can afford higher repayments than you could. So that's why we look at net disposable income. That's why you go in and have your own discussion. Okay. Again, we do this because we cannot put you in a compromised position moving forward. We have to make sure that there's enough net disposable income there to service the mortgage repayment. Okay. So once we found out the initial information, you've answered the questions that we need to know. We can see that there's debt repayment ability and the net disposable income is there, and you want to move forward with an application, then we will look for certain documentation of you. Okay, now this can be done in any which way. I'll meet you and collect the documents if you want, or you can email them over, or we can add you to our mortgage portal and you can scan them all over there. The portal would be the best option, but it's up to your own individual circumstances. So the documents that we do require, if you're a PAYE applicant, we need the completed and signed mortgage application form, a certificate of income, which we'll give to you. We need this stamped and signed by your HR department or your employer, and just to verify your income. We will need your 2023 employment details summary, which you can download easy enough off Revenue. If you receive variable pay or bonus payments, then we will need the last 3 years employment details summaries. Okay, so financial institutions look to take an average of your last 3 years income. So we look at the base that you receive, but we go to the employment details summary to calculate how much you actually took home for the last 3 years. And we take an average. So if you've only been in a role where you're getting variable pay for 2 years, unfortunately, we have to average this over 3 years. That's just the way financial institutions do it. I know if you're only in a role 1 year and you're getting variable pay, which just gives you a much higher salary, than your last 2 years, unfortunately, we have to average it out over 3 years. All right, because there's no guarantee that you will continue to hit this level of income or earnings, that you will earn the same commission and bonuses, so we have to take an average. Again, we do this to protect you where we can. We need a full 3 months most recent pay slips. So monthly, we need 3, fortnightly 6, weekly, we need 12, just to cover the full 3 months. We need a full 6 months most recent bank statements for all current savings and loan accounts. If applicable, this includes Revolut and N26. We can take screenshots, and again, we need to see the full 6 months. So people send in statements all the time with 3 days missing either end. We have to go back and ask for the full 3 months. So this is why it's good to talk to somebody, because a lot of people will send it in saying, it's only missing a day or two, and then I have to get back to them and send in more, and it's a back and forth, and it just elongates the process and seems it causes friction when it doesn't need to be. So we need a full 6 months of all your account statements, photo ID that we'll need as well, and then proof of any stamp visa that you need for employment purposes. Again, self-employed is different. We'll need the application form completed and signed. We'll need 2 to 3 years most recent tradings accounts certified by both the accountant and the director. 2 to 3 years most recent Form 11 tax returns. A letter from your accountant confirming both personal and business tax affairs are in order, or your OOS charges and payment statement from Revenue. Full 6 months again, statements for business and personal accounts, photo ID, and proof of any stamp visa needed for employment purposes. And someone is drawing on the screen. Thank you very much for that. Once the documents are received, then We will go through everything to ensure that all the previous information is given is correct. Again, we're not trying to pry through your business. We just need to make sure that it is affordable to you and that we have all the information to hand. So we will work for you to maximize the lending that we can possibly give you and that you need. Obviously, we want to get you the max. Hopefully, you don't need to borrow as much, but we always will seek to get you the max available for you. At least you know what your limit is. We have to ensure that we can see evidence of the debt repayment ability and the net disposable income is there. Well, typically for myself, once I get all the documentation in, I will go through it. I will list any queries that I have. Like typically some queries that we see is when we're going through the bank statements, there might be an out of course payment that's not salary or rent or anything like that, or child benefit coming in. It could just be 5,000 here, and we have to ask what that is. So if someone sold a car, we have to put it in to make sure it's not a second income. We have to ask those questions. So if you know that you're giving 6-month statements to us, no harm going through it before and being like, okay, I was planning a stag do or a hen party, then I had to get 150 euro of 10 people and they all put it in this account. Just highlight what it is so we know, because we're going to have to ask the question to ensure it's not a second income or anything like that. But then it's kind of typical queries that we see. But I'll go through everything, arrange a call with you, a follow-up call. I think it's better than going for an email to ask for the queries, because like if I ask you a question, you may come back with an answer that I need to ask a further question for. So it's easier to just clarify these things on a call. So I'd always recommend you do that with your mortgage advisor, just so there's not as much back and forth. Once I'm satisfied that all the queries I have are answered and I can't foresee any more, I will write up your recommendation. And again, the reason I have to ask those questions is that when the underwriter reads the recommendation, it's just tick, 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 green stamp. The easier it is for them to read, the less queries they have, the better for the approval. Again, I can't guarantee that I will cover everything. I hope to, but underwriters might look for more information on something that I only touched on because I thought it was sufficient. So again, there could be further questions down the line, but there shouldn't be too many, hopefully. And then typically once I submit it, once the underwriter has all their information, then you're looking at approval within 5 days. Okay, so that's once we get the documents in and we satisfied all the queries, we'll send it up and it should be hopefully 5 days. So the quicker you get all the documents in, the quicker I can do my recommendation and get to that approval. So there's not much in it really. I know people think gathering the documents can be strenuous, but again, like the likes of Revolut, you can just download the statements for 6 months easily. So it can be a lot easier. What's next then? Once you have the approval in principle, free to bid on properties. Now, what I did with my partner at the time, we blocked out the amount we were approved for. Now, you don't have to do this, but again, the real estate agent doesn't need to know how much you are approved for. Now, I've never seen this happen, but I wouldn't like the idea that if someone knew that 2 people were bidding on a property and they could afford to go higher, that they could just play people off each other. Again, I've never seen it, but for me, I blocked it out, and I know a few of my friends have as well, just to cover yourself. So it's just a little tip if you did ever want to do it. And once sale agreed, we'll then look for the following information. So once you go sale agreed in the property, we'll just confirm the property details, the purchase price, we'll order a valuation, finalize the amount, rate, and term. So hopefully, if it's a scenario where you have the help to buy and 30,000 saved, but your property is only worth 250, you can either use the 60,000 to borrow less, or you can use the help to buy to cover your deposit and keep the 30,000 to furnish the property, or if you need to do you need a new kitchen or something. So once you know exactly how much the purchase price is, you can then finalize the amount and what rate and term works best for you. And we'll need your solicitor's details, life insurance and mortgage protection. This is important. So as soon as you go sale agreed, if you for any reason at all feel that you have an underlying condition that you think is nothing, but it could affect getting life cover, or you had an issue a few years ago
Let me tell you,
would affect your life cover, go in and speak to somebody, because I've seen people leave this late and then get refused life cover over something they didn't think would be an issue, or because they needed it yesterday, they had to pay a much higher premium in order to get it across the line. So please do be mindful to check like your life cover as soon as possible. We'll be able to put you in touch with the right people there. Again, for home insurance, we'll be able to put you in touch with the right people, and you'll have to sign a direct debit mandate just to set up your monthly repayment. All right. Now, interest rates in the term. So I'll just quickly touch on fixed rate versus variable rate. So for fixed rate, if you decide to go on a 4-year fixed rate, say initially setting out, that means that for 4 years, your repayment will not change. They will stay the exact same for those 4 years, whether the ECB higher or lowers the interest rates. You're locked into that for 4 years at your set repayment. The maximum you can overpay is 10%. You can do this, pay 10% on top of your monthly repayment every month, or you can make a once-off annual payment of 10%, the annual amount you pay over the year. Most banks would do that, but EBS, so we like to offer something different, where if you come to me and say, Graham, I want to increase my mortgage repayments by €50 a month, then we will just calculate your new repayment, put it in place, and we'll bring in the term of the mortgage. So in the long term, you're paying less interest, and it works better for you in the long run. With a fixed rate as well, if you decide to switch mortgage, there's a breakage fee depending on how far through the fixed term you are. If you want to make a lump sum payment, if you do get commission or you got inheritance, there'll be a fixed payment for any overpayment above the 10%. If you want to switch from fixed rate to variable rate, there'll be a breakage fee as well. Okay. Now, if you do sign up to a 4-year fixed rate, before you end that, your financial institution will send you out a letter saying you're coming to the end. Here's our new rate, sign up to one, and you can automatically roll on to one. Okay, so you can stay on fixed rate for the life of the mortgage if you want. Variable rate it was historically higher than fixed rates, but it's dropped lower now. And to be honest, the largest part of the Irish mortgage market are on it now. I think it's 38%. 33 are on tracker, which we no longer offer as a product, and then fixed rate. And we'll take up the rest. So variable rate means you can pay down as much as you want whenever you want. There's no issue with paying down like extra money as it comes in, or on a monthly basis, you can throw down whatever you feel you have left over, or if you get large bonus and commission, you can just clear it as much as you want. There's no extra cost. With variable pay, if you wanted to break out of that and switch to another bank, there's no issue. If you wanted to go from variable pay to fixed rate, there's no issue either. A lot of people are afraid, well, not afraid, it would just be more wary of variable rates because, as the name suggests, it can vary. It can do. It's only been 3 major variances in it over the last 7 years. Really, that was a significant jump. But you'll always get written to first and let them know that it's happening. So then if it is happening and you're not happy with it, then you just sign up to the lowest fixed rate, and we can just move you straight over to the fixed rate. So it's a personal preference, whether you want to clear your mortgage as quick as possible, or you like the safety of the fixed rate. You just want to pay as much as you want every month. You can split your mortgage where you put a portion on fixed and a portion on variable. So again, if you like the security, you can put, okay, I want to pay this much every month to that amount, but with commissions and bonuses that come in, or you can just clear back down the variable as much as you want. Okay, so that's fixed and variable in a nutshell. So again, if there's any questions at the end, I'll happily talk through it. A tip I would suggest would be pick what's best for you now, because if you look, when you do get approved, how much interest you're going to be paying over a 30-year mortgage, it's quite frankly depressing because it's a lot. But like that, because you're able to switch mortgage now, you're going to switch more interest rates. It's going to constantly evolve. So just pick what's best for you now. And then as like more people enter the market, hopefully you might be able to switch and get a better rate. So don't let that frighten you. Just pick what's best for you now. Again, it doesn't have to be confirmed till you go sale agreed. So the approval in principle, I'll just pick the lowest rate possible for you just to get the approval done sweetly. And then once you go sale agreed and you know how much you're going to borrow again, then you can be like, okay, what payment am I happy with? ECB reductions, the European Central Bank, they did reduce it there in May, I think it was, at 0.25% from 4.5 down to 4.25. A lot of economists are saying it will go down a couple of more times before the end of 2025. No one really has a crystal ball to know this. It's just depending on inflation and how everything is going. But it's likely, if I was to give my honest opinion. But yeah, you can't guarantee on it. And again, it depends on whether the Irish banks will pass that on, because they were very slow to increase it on people, so they may be very slow to reduce it back down. So don't drag your heels and signing up to a rate just because you think they're going to go down. Just pick what's best for you now. The reason the rates are relatively high in comparison to years ago, the lack of choice. The market needs more banks. Obviously, Ulster Bank and KBC left. Revolut are talking about coming in 2025. MoCo are there, credit unions. Will they disrupt the market and start offering serious lending for mortgages? I hope so, because it's better for the consumer. If there's more choice, everybody's going to fight for the market share then. So hopefully it does come into play. When it comes to the term of the mortgage, the maximum term available is 35 years. The max age you can get a mortgage until is 68, unless you get a letter from your employer confirming you can work to 70. The reason I have 80 in brackets there after 70 is because MoCo, the company I mentioned above, have offered a mortgage out to 80. That is well and good for customers if they opt to do it. I would be wary of it purely because no one really wants to work till 80. You don't want to use your pension to clear your mortgage that you've worked hard for to live off. And if you do get life cover out to 80, I know we're all living longer and it's great, but the premium you might have to pay will be substantial. So just bear that in the back of your mind if you think that it could be a runner for you that you want to investigate. When it comes to finalising the term, we work off the oldest borrower's age. So whoever's the oldest, we can go as far out as we can to 68, and to maximise the mortgage that we can. Again, some people come in and they want to clear it in 20 years, and these might be a couple of 30. They go, no, well, nothing more than a 20-year mortgage. That's fine. It's up to you. Starting out, I would suggest that people go for the longest term available just to have the lower repayments, just because, again, they may need to furnish the property or do works, but it is a case by case, depending on how much you're able to afford monthly, what you decide to do. And again, it doesn't have to be confirmed until you go sale agreed and you know how much you want to repay and what rates are on offer. And then you can go from there and make your final decision. Some common myths that we see. That banks cannot count bonuses towards income. We can, if we can see it for 2 years. And again, we'll look to average it. If you've missed a loan payment in the past, you cannot be successful. You can, but be upfront about it and we'll make a case for it. So if you missed a car repayment for whatever reason, just tell us why and when, because it will show up in your credit review. And if you haven't been upfront about it, it will bite you, because the underwriter will look more less favorable on you because you weren't upfront, and it may rise suspicion. So just be honest. You can't get it across the line. If you can't, we'll let you know. And you may have to wait for it to be off your report, but it's unlikely. We could definitely make a case. And you must show you've paid off a loan in the past. Absolutely not. Like, we wouldn't penalise someone because they never needed to take out a loan. You don't have to show good credit. You can show no credit. That just shows better money management for me. All loans, credit cards, and overdraft must be cleared prior to loan approval. Nope. If you can afford them, keep them. Again, just show good money management. Now, when we talked about net disposable income earlier, if you come into me wanting a mortgage of a certain amount and I can't provide it for you because the net disposable income isn't sufficient enough, we will need to have a discussion. Being like, okay, if you have a car loan, if that car loan was gone, then you'd have enough net disposable income to borrow the amount you want. So maybe use some savings to clear the loan. We'll get it across the line, or come back in 6 months when the loan is cleared. Like, there may be need for discussion, but again, as long as it's affordable and you're getting the level of lending you want, there's no issue whatsoever. You can't have an extravagant lifestyle. As long as you're saving and we can see the repayment capacity and the net disposable income, you work hard for your money. Like, you can have your own lifestyle. Again, just as long as you've had a conversation with someone, you know the repayment capacity, you know what your limits are with net disposable income. Like I have customers who are approved a mortgage and they'll ring me and like, Graham, I need a car. Can I afford to take out a 300 monthly repayment? And I'll run the figures. I'm like, yeah, no problem, go for it. It won't affect you. I would highly recommend not taking out a car loan without talking to your mortgage advisor if you're going through the process, because it's a quick conversation whether you can do it or not. But yeah, no, it's your money. Like absolutely, go for your dinners, get a load of Just Eat, whatever you need to do, like whatever you want. Like, well, I'm not there to judge going through your bank statements. If it's your money and you want to go out and live that extravagant lifestyle, then you can. As long as we can see the repayment capacity and the net disposable income. Absolutely. Now, in saying that, some of the common reasons for decline, and I say decline with a pinch of salt, really, because again, if we've had the conversation, I'm going through all your documents, it shouldn't get to a decline stage. Like it may be a reason not to proceed right now, but it shouldn't be a decline. And even if it does go up and it does get declined for whatever reason, it's not like it's a red mark against your name and you can't reply for a certain amount of time or go back to that bank again. As long as whatever you're declined for is no longer an issue, like you've changed whatever mitigating factor it was that was a decline, then you can reply again. There'll be no issue at all. Okay. But some of the reasons that we may not proceed with would be a bad track record. The Central Credit Register, we will run this just to check. If you do have any concerns about your credit history, you can just go online and request your own Central Credit Register. It's like €6 and it'll be posted out to you within 5 days. If you have a bad account operation, like if you're frequently missing direct debits or standing orders showing poor money management, again, it can be argued. But if it's historic and you're constantly missing payments, say you don't have an overdraft and it's constantly you're getting direct debits, you're not showing money management, that there's sufficient money left in your account to pay for them on a regular basis, the underwriter might think it's a bit of a worry because you're likely to miss your mortgage repayment and go into arrears. So just be mindful of that if you are looking to have 6 months of clean statements for the mortgage process. But it's just better to get into that practice as a lifestyle going forward. If you don't have sufficient debt repayment capacity, then we can't proceed. If you don't have enough net disposable income, then we can't proceed. And then if the deposit is not at the level that we need for the lending that you want. Okay. Again, these are all just reasons that we will not and cannot put you in a compromised position, because like that, it's our aim to make you happy as a customer and give you the keys to your perfect home and make sure that you can stay in your perfect home forever, as long as you want to anyway. Then like we have to do right by you. It's what we want to do, we need to do, again, from a personal aspect, us as a business aspect. Like so then who can I help? Applicants who are ready to apply for a mortgage, first-time buyers, movers, second-time buyers, non-resident, people who want to switch their mortgage. I can always have a quick chat with them to see if they can save money by switching, or if it's better off staying where they are. Even someone who's not looking for a mortgage yet, but would like some discreet advice, just to help you get your ducks in a row for when you're planning for 12 months down the line. I'm happy to have a conversation and help wherever I can there. And then there, my contact details there that I don't know if they will be shared. I hope they'll be shared after in case I can't help anybody. But that's it there in a nutshell. I know I didn't cover everything. Yeah, I don't know how I did on time, so apologies again if I went over. I wasn't even paying attention. Sorry, I just rambled. But yeah, look, I have a couple of slides on the government schemes if you want me to go touch 2 minutes on it, or switching, why people switch their mortgage. But again, I'm happy to take a Q&A now if that's more pressing. Whatever you think.
Okay, so I'm just checking the chats. There are double question. If people have questions for you, but maybe just quickly go through the government scheme for 2 minutes.
Okay, so that's just what EBS offers. I can send that out as well if you want. But yeah, so the government scheme, the two main ones that we see now that can be combined, just in case I forget to mention it, you can have both. But the Help to Buy scheme, again, I'll share the presentation, and these are links to the actual websites if you can access it. It's an incentive for first-time buyers. Now, there are certain criteria. So it's the health towards your deposit for the purchase of your new build home or a self-built home you're building, or apartment. And you have to live in it as your own home. Okay, so it has to be your primary residence. The amount you can claim, the maximum is 30,000, and it's a refund of the income tax, well, the dirt tax that you paid in the last 4 years prior to it. It's 4 years still, isn't it? Yeah, 4 years prior to it, based on starting with the earliest year. Okay, so that's how much you can qualify for. So if you've been paying dirt tax for the last 4 years, you should be able to get to 30,000. The approved valuation of the property must be 500,000 or less. So obviously this is a stumbling block for people looking at new builds in Dublin, because even if they start on the market at 390, the likelihood is, because of the lack of supply and the amount of people bidding, it could exceed 500. So the fact that it's being sold, like, it has to be below 500 is difficult. And the loan must be at least 70% the purchase value. Okay, so if you're, like we said, 90% is the max we can lend, and you have to provide 10%. Like, say you're only borrowing 60% and you're funding 40%, you can't avail it. Okay, so the maximum you're lending has to be 70% of the value of the property. Again, it's great. Like, the amount of people who've used it's fantastic since it came out, but again, it doesn't suit everybody. The first home scheme is newer out. There's a lot of different initiatives in this. So essentially, it's an affordable housing scheme which supports you to buy your new home or build your first home. It's a shared equity scheme, which means that the government and participating banks pay up to 30% the cost of the new home in return for a stake in the home. So you can get the help to buy, you can have money of your own deposit, and you can qualify for the first home scheme where they will pay another 30% the cost of your new home. Again, this is great to help you get the home, and it's no interest for the first 5 years. I think you pay back on the 30%, and after that it goes to 1%, and then it goes up higher. But say you sell the home and you want to, well, at any point, if you just want to clear the 30%, the 30% goes from the 30% it was that you got lent initially. You have to repay back the 30% the value of the property when you're looking to repay it. So with inflation, if the house value has gone up 100,000, 30% has increased as well. So just be mindful of that you do have to repay back 30% of the value when you are looking to repay it back anyway. Okay, so they're the two initiatives. There is one coming down the line, Creek Conaha, which I'm confident, I'm hoping will come down the line, is to help people with buying an apartment. It's encouraged people for apartment living. Again, this is another substantial scheme to help you fund the purchase. So it is coming down the line, and I keep an eye out for that as well. But they're the two main ones anyway. So they're in a nutshell, but I'd say really carefully make sure it's right for you. The help to buy, definitely, but the first home scheme, I'd be a little bit cautious of. Make sure it's right for you anyway. But they're the two main government schemes anyway.
Amazing. Thanks so much, Graham. That was so insightful, right? For a lot of people, and I see our chat, it's blowing up. We have lots of questions, so we have about 10 minutes.
Oh, sorry.
I probably run over by by 5 minutes. So there's a question here about from WS, not sure the full name. So the question is, how does lump sum deposit in the bank statement, maybe from a second income, affect the process?
The lump sum payment, okay, like if we see it in the last 6 months, then we have to query what it is. Like if it's a gift that's come in from somebody, we'll need a gift letter signed from whoever gave the gift. If it's from, as you said, a different employment, we'll need to know like if it's your PAYE and this is coming in from a self-employed income that you have, we're going to need all the self-employed documents that I touched on earlier, because we have to go through everything, because we have to look at your full circumstances to make sure that it's affordable, because you might be on a good PAYE, but you're operating at a loss in the business that we're going to have to look and try and work through. So if we see it, we're going to have to query it like that. Again, if we don't see it in the 6 months, like we're not going to know about it. But again, I wouldn't encourage people to do that because we're, again, as I said, we're looking out for your best interest to do it. So just give us your full circumstances. It all depends, to be honest, because again, I've had a case recently where someone's PAYE and self-employed, but the amount they're looking to borrow, we can get solely on this the PAYE income. So we're only using that for the 4 times calculation, say, and we got a letter from the accountant saying that there's no losses or debts with the business, and we don't need to look for the accounts. If the money's coming in from the accounts for a deposit, the underwriter may request it. Again, it's case by case, really. It all depends on the amount, and they may need to see that it's feasible to come from the business. So I hope that's giving you some insight. It's not like, again, it's case by case. I need to sit down and have a look at it, to be honest. But if it's in the last 6 months, we will need to query it. Yeah.
All right. That was great. So we have a couple of sessions as to what happens if you want to sell the house before you are done paying off the mortgage.
Yeah, so we can do a mover mortgage. So typically what people do then is they come in and see how much of a mortgage they can get. You look at the value of the property. So you look at how much mortgage you have left on the current property, say, all right? How much it's worth, how much you're going to sell it for. The difference between how much the mortgage is and the value is what's like the equity within the property. So once you sell the property, clear off the loan, pay your solicitor's fees, what's left over is the equity that you can use towards a deposit on your new home. Okay, now a lot of people look to move and keep their home and rent that home out. You can do that, that's no problem. But if you're looking to clear your mortgage and move to a new home, then yes, if there is positive equity, you can use the remaining funds after you clear the balance as a deposit for the new home. If there's no equity in it, then it's a different conversation. I wouldn't advise selling then unless you have the funds to clear the loan.
Alrighty. That was a great one. So I think I'm gonna merge these 2 questions as one. So there's a question around, does one need to get AIP from several banks or can work with one? Then another question I think you can answer at the same time is, what is the best way to apply for a mortgage through your bank, broker, or a scheme?
Okay, so the approval in principle, yes, I'd love everybody to run into EBS and give me their mortgages. But it's such a massive financial decision that I would encourage people to get approval in principle off every bank. And like that, you'll have them there. And then, like I said, you don't pick the rate and term until you go sale agreed. So then whoever has the best rate by the time you go sale agreed, go with that institution. Like, yeah, I'd love the loyalty and everybody to stay with me, but we're like, you can't not know how difficult it is for people, and people are right to just get the best rate and go for what's with them. So I would suggest getting approval in principle of every bank. But again, it varies on service, etc. Like, we're the best, just so everyone knows we're the best. But yeah, I get approval in principle of everybody. The broker, a lot of people prefer brokers. Okay, every bank looks for the same documents I told you. I listed there for you. So if you've already gathered them, you can go to every bank yourself if you want to handle it yourself and see who's giving you the best service or anything like that. The broker, they will just take those documents and they'll go to every bank for you, which again, well, not every bank. A lot of brokers can't go to every bank. That's a common misconception where everybody assumes the broker can go to every institution. They can't. Certain brokers can't go to every institution. So just ask that question if you are going with a broker. I don't get me wrong, brokers are great, but a lot of them can't go to every institution, or they may get a better fee for going to one institution than the other. So just be mindful that they may go to one because it's more favorable to them and just argue the case for you. But if you're confident that you can do it yourself, I do it yourself. It doesn't take that long if you have all the documents and every bank's looking for the same thing, to be honest. Sorry, there was one other question tied in there. Oh, the schemes. You just apply for the schemes yourself, like the first home, the Help to Buy scheme, And then you let us know that you have an approval and it shows proof of approval, and we'll add it into the mortgage. As far as I'm aware, there's no schemes like that who do the mortgage themselves. Apologies if there is. I don't know about it. Yeah.
Yeah, so there are a lot more questions in the chat, so apologies guys. We're not gonna have the time to cover everything. So feel free to get Graham's detail from the slides. We're gonna get access to the slides, right? And share it.
Yeah, I'll share them with yourself and you can distribute them as you wish. Yeah, that's fine.
Okay. Thank you. So I'm just checking the chats there. Do you have any advice on preparing for a mortgage for a graduate or early or entry-level professional? I suppose that's what that question is.
Typically, we look to see it in employment for permanent employment for 6 months. Well, like once you pass probation and we can see one pay slip and that you passed probation and a letter from your employer, the salary cert saying that you're now permanent, you can apply for a mortgage. Okay, so there's no minimum age or anything like that. If you've just moved roles and you've done 6 months probation, you can apply for a mortgage. And saying that if you've moved from one industry to a very similar industry, you may be able to forego the probation period because you've shown that you can work in the same industry. But for a graduate in that, once you're permanent for 6 months, you can apply. So it all depends on whether you have your deposit saved and stuff like that, when it makes sense for yourself to apply. But I would always say, I think we touched on it at the very start of the day when we were just chatting, that always be saving a little bit just for your own financial wellness, for a rainy day fund or anything like that. But the second you're serious about going for a mortgage, just go in and talk to a mortgage advisor or give me a ring. Yeah. But yeah, once you're in permanent for 6 months, there's no problem coming out as a graduate or anything like that. I hope that's helped.
Thank you. So there's a question here on, is there a minimum deposit required for the buyer, from the buyer for FHAs and HTB?
They help to buy in the first home scheme. 5 years, it says there in the chat.
Okay, so
sorry, the minimum deposit. So
yeah.
if it's a 300,000 house and you get the help to buy for 30,000, if you have the stamp duty and the legal fees, then that's it. That's all you'll need. As long as the full deposit is covered, then that's fine. Yeah.
All right. So I think you've answered all the questions. Some of it are a little bit repetitive, right? Someone said, I saw some adverts online about using pension to get mortgage. Is there such an option?
I haven't heard of it, if there is, to be honest. Well, again, like I touched on, if it's for repayment capacity, we could use it if it's an additional voluntary contribution for the repayment capacity. But other than that, if you're retired and you're using your pension, if it is going out for the rest of your life, but again, it all depends on the term of the mortgage that you're after at that life stage. So again, I'd need to know more information.
Alrighty, that's great. So one last one before we wrap up. How much are typically the stamp duty and legal fee? I think you covered this at the beginning of the session, right?
Yeah, so 1%. The stamp duty will always be 1% the value of the property. If you go above $1 million, then it goes to 2% for anything above $1 million. And then the legal fees, they typically tend to be around 2,000 to 2,500. So we only look for 2,000, but the more you have, the better, just to be safe. Yeah.
I love that people are interacting in the chat and helping others. So what is the name of the government scheme, the government apartment scheme you mentioned that will be coming soon?
It's Cree Conaha. It's in Irish now. I'll try typing it in here now. I hope the spelling's right. But have a Google and see. There, have a look through it. It's coming down the line, hopefully soon enough. And it is a very helpful scheme, I believe. But again, they haven't released enough information on it, just so I can be 100% confident on it yet.
Alrighty. Well, do you have to sell your previous home to buy a second one? If you can keep your home and buy a second home, what will the bank be looking for to evaluate your ability to own
It will
both?
depend. You can keep your home and buy a second home, but if your current home has a mortgage on it, we'll need to make sure that any rental income will cover the mortgage. If you want to maintain it as a kind of retain the property, and then you have to be able to afford your own mortgage, your new mortgage on top of that. Okay, but if you don't have a mortgage on the property, there's no problem with you buying another property. But if you are selling, it will depend on how much rent you can get and what area it's in, stuff like that, just to confirm the rent is sufficient to cover the mortgage that you're leaving.
Amazing. Yeah. Sorry. Last one. Is there a way we can check how much we can get from the Help to Buy scheme? I know they say it's 30K, but I've heard some people not getting full 30K.
Yeah, so the reason you wouldn't get the 30K would be because you haven't paid enough of the tax over the last 4 years. If you just Google Help to Buy, you'll be able to just click on the link and follow it, and you'll be able to apply then and there to see how much you can get. So I would advise doing that anyway, just so you know where you stand. Yeah. And definitely just apply and get approval for it. You don't have to use it again, but apply and use it, yeah.
All right. Okay, so that was so helpful. Thanks so much, Graham, for joining us.
So I just saw a question there, the downside to the Help to Buy you mentioned to be cautious. That was more around the first home scheme. I think the help to Buy is just save as houses, really. But yeah, the first home scheme I just read about. Yeah, if I was you, just to make sure it's right for you.
Amazing. Thanks so much. Thanks so much, everyone, for joining the session today. Thanks, Graham. Really appreciate your time. We can reach out to you on LinkedIn. We have your details on the slides. We'll send that alongside with the recording as well. So for those of you joining, we are APNI, and if you're interested in wanting to be a community member, we'd love to have you. So feel free to scan this barcode on the screen or go to apni.ie to sign up for membership. We have a lot of benefits as to being an APNI member. Webinars like this we provide. We have networking events. We provide support for your career. For example, we have the mentorship program where you can hop on a platform and book career mentors that can support you along your career journey. And we also have our upcoming career day. Did I see it? Yes. So upcoming events, we have the mixer. So do not forget, it's on the 9th of August. We're going to be in person at the Morrison Hotel in Dublin, and upcoming career day this year is on the 17th of October. So block out your calendar. We have exciting programs and activities planned for you. And so that brings us to the end of our session. Thanks again, and enjoy the rest of your evening.
Thanks, everybody. It was a pleasure. Thanks again, Adima.
Thanks, Graham. Thanks, everyone.
Thank you.
Thank you.